When I was talking about GameStop about 2 years ago, I was saying how this is a good investment, the investment of a lifetime. Everybody was saying that this company is going bankrupt, that the short squeeze will never happen. When I'm talking about GameStop today, I'm saying that it's overvalued, that there are other stocks which are better than GameStop today. Everybody is talking about the short squeeze, which, by the way, they think has not happened yet. So why this is the case? Why retail investors are always so wrong? Why retail investors are always losing money? It's not just about GameStop. There are so many companies we can talk about where retail investors lost money. Most retail investors lose money over the long term. Over a 20-year period, actually retail investors underperform all asset classes. The stock market is a winning game. So if retail investors are losing money, it means they are doing something wrong. And it's not just retail investors. Even the institutional investors, they are going to lose money, but not that much. Hedge funds, they make money, but the data, of course, is skewed because most of the hedge funds which already went bankrupt, they are not included in the data. So this is a survivorship bias. But it's okay. It doesn't matter. Retail or institutional, most investors lose money in the stock market. So I wanted to talk about a particular stock, and I chose to talk about GameStop because here this is a very interesting example, something I've been talking about for over 2 years, something I know very well about. And why I want to talk about GameStop, it's because investors are losing money on both sides. Investors were losing money in the beginning because they thought the company was going down, but now they're losing money because they think that the stock will just go up. So before we go into details and talk about GameStop and why retail investors in general lose money over the long term, please make sure to smash the like button for the YouTube algorithm. If you are new to the channel, my name is Ishfaaq. I am an elite popular investor on eToro with over $2 million in assets under management. So please subscribe and hit the notification bell so that you don't miss the coming videos. If you look at the stock price of GameStop over the last 5-6 years, not counting this year, you will see that it has been declining. The stock was down by more than 90%. And the main reason was that the market had a consensus that the business was not going to do well with digital, with online retailers such as Amazon, such as even not online but bigger retailers such as Best Buy. So GameStop had this business that they were selling video games. Okay, there is nothing wrong with this, but the way that people play video games now have changed. You can download the video games easily. You don't have to go to GameStop to buy them anymore. You can buy them on Amazon. You can go to Best Buy or Walmart to buy them. So the competition for GameStop was big. The sales were going down, and people were worried that the business would eventually go bankrupt, would fail. Just like Blockbuster, so many people were comparing GameStop being the next Blockbuster. But this did not happen. But some people were so convinced that GameStop was going to fail. What they did, they saw that the stock price was going down, they shorted the stock. There is nothing wrong with shorting a stock, but they were shorting it too much, and there were more shares being shorted than shares in existence. This is naked short selling, which is not really that good. But when we look at the fundamentals of GameStop itself, they were not as bad as people were saying. The company was not doing well, yes, revenues were going down, but we need to understand that there was a new console cycle coming. And if a new console cycle comes, which happens every 7 years, it would not matter how much revenues they are going to make. They are going to make a little more than usual. They would be able to generate enough cash to return it to shareholders. And when you're investing in a company, this is what you're looking for. You want the company to return money to you. And GameStop was able to do that by buying back shares. Actually, they were able to buy back shares even before the new control cycle began. And that's because they had a good balance sheet. Even with all the bad things that were happening to GameStop, they had more cash than debt. And the correct cash, the net cash value of GameStop was actually bigger than the market capitalization of the company. So they could repay all their debt and even take the company private if they wanted. So this is something that the market didn't see. Mr. Market, retail investors in general, even institutional investors, they were looking at the big numbers. They were looking at the income statement. If you look at the income statement, you will see GameStop was losing money. But that's because of impairment of goodwill. They make some acquisition, they had some goodwill, but when the stock price goes down, they have to impair the goodwill. But in reality, the company was not losing that much money. Yes, it was losing money, but not that much. The cash flow was already positive. Of course, as a contrarian investor, I invested in the company. And then we all know we had the short squeeze. We are not going to talk about this again. And then what happened after the short squeeze? Now the consensus has changed. Now it is that the short squeeze has not happened yet. these people on Wall Street Bets on Reddit, they are talking about it that apparently it did not happen yet and that it will happen. So this is a new consensus. It's the same mistake that retail investors made 2 years ago, 3 years ago. They are making the same mistake again. 2 years ago, they did not know how to read the income statement. They did not know that most of the losses were from impairment of goodwill, that the company had a very good balance sheet. And today they are looking at the data wrong again. The main reason why people say that the short squeeze did not happen is because of ETFs shorting GameStop. But you look at these ETFs, they are not shorting GameStop that much. So there's no longer naked short selling anymore. And the number of shares outstanding on GameStop being shorted is very low. So the short squeeze already happened. It's just like it happened with Volkswagen Group in 2008. There are some people who bought at the peak and they were still expecting it to go higher. They were still expecting that we'll see a higher short squeeze, and they are still expecting it never happen again. So the short squeeze GameStop, it's over. We can move on. I don't know anyone individually. Personally, I don't know anyone, but I believe there are some people who were shorting GameStop 2 years ago. Today they are buying GameStop expecting a short squeeze. Because this is how speculators think. They just want to make money, not basing it on any fundamentals. So they are not going to do research. This is why most retail investors lose money. They are not going to put enough time to do the research before making an investment. So 2 years ago, what they were doing, they were just looking on CNBC that GameStop is losing money, on Forbes that the revenues are going down. They won't take the time to go and actually read the balance sheet. They won't take the time to actually read the cash flow statement to see that cash flow was positive. They won't take the time to see what was happening inside the company, that yes, management was bad, but it was going to change with Ryan Cohen entering the management. So it was changing. They did not take the time to research all of this. And now today, it has changed. They don't really look at CNBC anymore. It's around Reddit. When these people who talk about doing your due diligence and all, it's the same thing that they were talking about 2 years ago. But the main difference is that 2 years ago it was on CNBC, now it's on Reddit. And even those people working at CNBC, working at the hedge funds who are shorting GameStop, don't you think they do due diligence? Of course they do it, but they do it the wrong way. So it's not just that you have to do due diligence. This is the word everybody is using now, that this is how you're going to make money in the market. You need to know what you're doing. Don't just read on Reddit or on CNBC or on Forbes that something is about to happen, that it will happen. Do your own homework. Now you may tell me that you don't have the time to do your homework, that you have another job, you don't have the time to do it. It's okay. Then you don't have to be an enterprising investor. There is nothing wrong with that. You can still be a retail investor without being an enterprising one, but you have then to be a defensive investor. So what's the main difference between the two? Is that the defensive investor, they don't have the time to allocate for research. So they're only going to invest in companies which people know very well. For example, big companies such as Apple, such as Microsoft. Nothing wrong with that. You can even invest in ETFs. There is nothing wrong with that. You don't have to invest in a company such as GameStop, because GameStop, this is not a company for beginners. If you're a defensive investor, I would never recommend you investing in GameStop, because this was a special situation stock. It's the same thing when I'm talking about Genworth Financial and UNFI. These are not stocks for beginners, because there are many things which are complicated with these companies. For example, Genworth Financial. You need to understand the growing liabilities in their life insurance business and how is this affected by different state laws. This is not something for beginners, so I won't recommend it for a beginner, for a defensive investor. If you have the time to do the research, of course I'm doing the research for you, I'm sharing it with you. It's okay, you don't have to trust me at 100%. Go and do your own research. Look at other people, what they're saying about the company. And then if you see maybe I'm right, then maybe you can make an investment. But just because someone has apparently made research and sharing with you, doesn't mean that you have to go and invest in the company. Investing is not easy. Some people say it is very easy, that you're just going to invest in a company, GameStop, Genworth Financial, or whatever, Bitcoin, and you're going to be rich after 1 year, even 10 years. Now people are thinking long term. I'm happy people are thinking long term, but it's not going to happen like this. You think long term, yes, but you think maybe you're going to make 15% a year, not 100% a year. Don't think that you're going to invest in something and it's going to double every year. Don't think you're going to invest in Bitcoin, in GameStop, it's going to go to infinity. Because let's talk about GameStop again. This was supposed to be the topic of the video. Some people are talking about the shares going at $10,000, $100,000, $1 million. I've seen. So you're saying that GameStop will be $1 trillion company, that GameStop will be bigger than Apple? How is this even possible? When the short squeeze happened with Volkswagen Group, at the peak, it reached a market cap of $400 billion. And Volkswagen Group, of course, is a much bigger company compared to GameStop. GameStop is a company with only $5.5 billion in a trailing 12 months in revenues. 5.5 billion. And you really think that this company today deserves a market cap of $10 billion? Of course not. It is overvalued. That's why I'm no longer invested in GameStop. I still believe in the company. I still believe that Ryan Cohen can do something, but I don't think I'm willing to pay $10 billion for this. And one more thing that why I sold, it's because Ryan Cohen came, but he did not share his plan yet. Yes, he wants to take the company more digital, but what's the plan? I need a plan first. If he doesn't give me the plan, why I'm going to invest in the company? Because now there is a new management. Whenever you're investing in a company, you're investing in the management. There is a new CEO, you're investing in the CEO, you are hiring the new CEO. But what's the plan? You're happy you didn't like the old one. There is a new one, you're very happy with it. But what's the plan? If there is no plan, then it doesn't make any difference whoever is CEO in the company. There needs to be There needs to be a plan first. Without a plan, we just got into the water. Without a plan, you just get into the water and drown. So let me know in the comments, what do you think about GameStop? Do you really think that the short squeeze did not happen yet and that the best is yet to come? I used to say this sentence a lot last year, but now the best is not yet to come. The best already happened. So let me know in the comments, what do you think? Thank you for watching this video. Please like, subscribe and share. Please watch these two videos if you have missed them. Have a nice day and goodbye.